Ladies and gentlemen, welcome to the non-lending Fintech solution session. Moderated by Sofia Christoforidou, journalist of ERT3 and Makedonia newspaper. With the participation of Eleni Vlami, head of account management by Meniga. Vasilis Zoupas, co-founder and CEO of Woli Fintech. Theodoros Koukoutsas, CEO of GX Blocks Energy SA.
Good afternoon, ladies and gentlemen, those who are here with us and those who follow us via internet. Welcome to the fourth session of the Alternative Finance Forum 2021. First of all, let me introduce myself. I'm Sofia Christoforidou, journalist with Makedonia newspaper and the third channel of the Greek public broadcaster. I would like to thank the Business and Cultural Development Center for the invitation to moderate this panel and the opportunity to learn more about the three fintech companies of our panel. Because I have to admit, this is the best part of my job. My task is to be curious and to learn new things all the time. I think this is great, isn't it? For example, who knew 10 years ago the term Fintech? I didn't. Some of us don't know it until today, although we might use our mobile phones as wallets, buy things and pay via PayPal, and use all those digital services that make our everyday life a lot easier. So before we start talking about our honorable guests, let us begin with a short definition. Fintech stands for financial technology, a term that is used to describe new tech that seeks to improve and automate the delivery and use of financial services. I think it's quite easy, right? At its core, Fintech is utilized to help companies, business owners, and consumers, all of us, to better manage our finance operation processes and lives by utilizing specialized software and algorithms that are used on computers and increasingly on smartphones. As final users, as consumers, we only have to know this. When Fintech emerged in the 21st century, the term was initially applied to the technology employed at the back-end system of established financial institutions. Since then, there has been a shift to more consumer-oriented services and therefore a more consumer-oriented definition. Fintech now includes different sectors and industries such as education, retail banking, fundraising, and non-profit, and investment management, to name a few. In this session, we're going to explore a few examples of the fintech's expanding horizons, working in new segments of the market. As you will see, the cases presented during this session are very different, but what is common in there is their effort to use technology outside the traditional banking and lending business and disrupt their respective segments of the market. Actually, all three of them are somehow dealing with our future, that is, our planet and our children. Let's start with the most difficult one for me, GX Blocks, that is looking to connect the provision of green sustainable energy with cryptocurrency and investments. Meniga is looking to create green financial products beyond traditional banking products. Woli, that is targets new clients and services such as financial literacy and alternative financial products for young people and their families. So it's my pleasure to present the panel, Mr. Vasilis Zoupas from Woli, Ms. Eleni Vlami from Meniga, and Ms. Theodoros Koukoutsas from GX Blocks. First of all, as you see in my back, you can see the code and post any questions you have in the second half of this session. All three of you, I would like you to explain to us what exactly do you do, what is the service that you provide, and for whom, who are your clients and your market, your business model. What motivated you? What was your vision and your goals in your business? and how your solution will change our lives, because I think that is the point. Let's start with the lady of the panel. Eleni, the floor is yours.
Thank you so much. Thank you, Sofia, for the introduction, and thank you for having me, and hello, everybody. My name is Eleni Vlami, and I'm Head of Account Management in meniga. Meniga is a software company from Iceland that creates white label solutions for banks and financial institutions. We have, as you can see from the screen, a global presence with our customers, including here in Greece. And what we do is we create fun, simple, and effective solutions that support people lead better financial lives. A bit of a background, because I presume that none of you in the room at least knows meniga. So the company is, as we said, from Iceland. And as you probably recall, during 2008 and the economic crisis, Iceland was hit pretty hard by the depression. So Icelandic kroner lost much of its value. The inflation skyrocketed from 3% to 19% in a matter of a few months. Most of the people lost their savings, and there was a very unfortunate time for the people of Iceland that they wanted a solution that helps them get back on track with their finances. And there was also a big need for the banks in Iceland to provide solutions like this for their consumers. Under this need, meniga as a company and meniga as a solution were born. Unfortunately, the need for financial literacy and solutions like this is not just a problem focusing in Iceland, it's a global problem. So next step for us was to reach out to the rest of the world, both with a solution and with our company. We grew a lot since then. Currently, we have offices in London, where I'm based, Reykjavik, Stockholm, Warsaw, Barcelona, Singapore, and New York. Transactional data is on the focus of what we do. Transactional data does hold the key to understanding every customer and drive critical outcomes in every digital banking solution. So what we do is we bring this data together, we categorize them, we enrich them, we enhance them, and we present them in the way that consumers can actually understand the spending and optimally support them with making better financial choices. A bit of a background on the actual portfolio in meniga. So we have solutions, as we said, that support banks improve the digital channels. We have advisory tools. This is easily configurable technology solutions that support banks with their role as financial advisors. We have engagement platforms that are all designed under the UX and UI psychology lenses. And we also have banking engines such as categorization and enrichment engines. Both are working towards supporting banks managing the data that they have in presence. So as we said, what we do is we try and form a better user-friendly environment, both UX and UI, when it comes to the digital solutions of every bank. And by doing this, we create habits and we push every consumer to come back to the online bank for more tasks than just the commodity banking. The solution that I wanted to talk to you about today is called Carbon Insights. This is one of our newest additions in our product portfolio, and what it does is enabling banks to inform their customers about their carbon footprint, help them reduce it, and optimally offset it. So what Carbon Insights is doing is enabling the banks to support their consumers, reducing the carbon footprint that they have with their spending and reducing the impact that they have towards the environment with their lifestyle and their transactions. A bit of a background on why we decided to create this product and how we decided to add it in our product portfolio a few months ago. So, of course, there are countless statistics when it comes to people's need and people's concern over climate change. It's also a very interesting finding that although we are in the midst of pandemic, COVID hasn't really distracted people's concern over climate change, or quite the opposite. At the same time, it's an unfortunate example to use COVID, but it did show us vividly what happens when we don't work together to address global threats like this. Inside story on meniga, Carbon Insights was created as part of a hackathon. So before COVID era, we in sales, we were traveling to customers on a weekly basis. There was a lot of trips, there was a lot of flights. So we decided to just track our own carbon footprint. And when we started pitching the product externally, COVID hit. So we decided to click pause. We thought that this is probably not the correct timing for a solution like this. But we were actually positively surprised when we started pitching again the product last summer. that there was a real need for solutions like this. There was a real interest and we received a lot of proposals, both from existing customers and prospects. And actually, as of today, we have 3 of our existing customers having Carbon Insights live in production, and we are aiming to have more implementations live by end of this fiscal year. So people are not just concerned, they are ready to act. And we see more and more customers and consumers being ready to vote with their wallets and choose solutions and brands that they are actually taking a stance climate change. So servicing these emerging consumer needs is not just a responsible thing to do, it's also an opportunity, a business opportunity for banks and financial institutions. So what is the actual question that financial institutions are coming to answer? First of all, people want to understand their carbon footprint. And secondly, they want to be empowered to act. On the positive news is that we see, especially in the banking world, that there are more departments and more teams that are dealing with sustainability and ESG strategy. And we see more and more products coming on board and coming in production. Most of the products, at least in banks, are related to ESG funds that we see they are growing double digits every year. But at the same time, we see more and more innovative solutions. But for us, when it comes to banks, we see that because banks are the custodians of personal financial data, they have a very unique opportunity of making carbon insights and carbon footprinting mainstream. And what we mean by that is that they do have the possibility of presenting individual carbon footprint for all of us and make it a real trend and put it as part of a wider, let's say, digital banking journey. A bit more detail on the solution. I'm not going to go again in much detail, just an overview of the areas that the Carbon Insights solution is covering. So first part of the solution is the carbon calculator. This is a service that allows consumers to get an instant estimate of the carbon footprint per transaction. Second step is the carbon awareness. This is a service that is providing them with a summary and a detailed view of their carbon footprint, filtering by time, period, and category. Third one is the Carbon Insights. Carbon Insights is notification and insights that are supporting consumers to reduce their carbon footprint, but also allows them to have a benchmark of how other people, either in the same community or from global averages, are spending when it comes to carbon footprint. And last but not least is Carbon Action. This is the service that is allowing customers to offset the carbon footprint that they have produced. And this can happen either via international recognized offsetting programs or through the bank's eco-friendly portfolio and ESG strategy. When we talk about Carbon Insights solutions, there is an integral part of every solution, and this is called Carbon Index. So we talked about transactional data in previous slides, but how do you actually calculate this and how do you actually present it to a customer so they can understand how much they are producing? So basically, how much carbon footprint have you guys generated with your flight from Athens to Thessaloniki yesterday? So this is a two-step process. First process is that you classify every transaction based on a specific category, and this specific category needs to be mapped to a certain taxonomy. And then the next step is that this taxonomy needs to be mapped with a CO2 equivalent. There are a lot of indexes in the market, and people who are in this industry, including ourselves in meniga, we have analyzed a lot of indexes that they were already present. We, for several reasons, decided to build our own index. Because we have a lot of experience in financial data, we see that most of the indices that they were available were basically based on very extensive questionnaires, and we thought that this is not very accurate when it comes to the numbers and the results you are getting. Also, most of their models were very static, something that is not really working well with financial data, so we decided and we built our own. Of course, we are not alone in this journey. Yes, the product was developed by our product team and the index was created by our data science team, but we have an environmental committee that works with us and supports us by reviewing and analyzing the methodology and approach that we have towards the product. The environmental committee is, of course, composed by experts in the fields of carbon footprint, accounting, and climate change. And we are also one of actually the only vendor that has a third-party reviewing and analyzing our index. Our index has been certified by Ernst & Young. Summarizing why we want to see more financial institutions getting involved and more customer-facing industries joining us in this fight against climate change. Of course, you are servicing a very clear customer demand. there is an increase of high-quality digital engagement, and by providing solutions like Carbon Insights, you are addressing this. You are strengthening your brand, and you build a long-lasting loyalty with your customers. And last but not least, this is another business opportunity and another revenue stream where you can actually grow your sales of green products. This is what I had for you guys today. I hope I managed very quickly to give you an introduction on meniga and a high-level overview of carbon footprint. But of course, I'm happy to answer any questions during our panel. Thank you so much for listening.
Thank you, Eleni. Thank you, Eleni. I have a lot of questions, but I will have to wait until all three of you present your first presentations. Vasilis Zoupas, he's the co-founder and CEO in Woli Fintech. Your app is only 3 months live, right?
More or less, yes.
So tell us
Maybe
more
less.
about it.
So thank you very much. Congrats to everyone. Nice, Eleni, thank you so much. Very interesting. My name is Vasilis Zoupas. I'm the co-founder and CEO of Woli. We are a smart money app for modern families. Essentially, we're building a banking experience for kids. So that's a segment that we think still has a long way to go in terms of the adoption of, digital payments. And I'm really interested in sometime when we're mature enough speaking about integrating meniga into this, because
I told you Wolis will be the next
yeah, because the young generation, early feedback we have, because you'll see down the road what we offer, is that they're very conscious about the footprint of the way their money is being spent. So let's jump a bit into what we do. So we're a money management platform designed for families. We essentially want to help children grow good money skills in a really fun and really secure way. What we're building is a smart money application and a MasterCard for kids from the age of 10 to 18, which is essentially co-managed by the parents in a smart way. And the USP that we have is that we're really bringing educational elements, so a platform that actually helps kids learn through specialized classes on financial literacy. The problem we try to tackle here is that more or less kids do not manage their own money in a proper way until they're 18. So this kind of creates a mayhem of problems for both kids and parents, right? I get always the same thing by parents at this target, let's say, age, where usually their 13-year-old son steals the debit card to play Fortnite, and then they find the transaction, and they're like, where is this money going, whatever. So for parents, we're trying to automate pocket money. We try to give them control of kids' spending. And the problem of financial classes is a well-known fact that it's not taught at school or at home in a proper way. So that's a big gap that we find. And for kids, essentially, it's their first money account. They can have their own tool for e-commerce payments, their own MasterCard, and gain some skills when they're 18 years old. So if you jump in this slide, which essentially is the diagram of what we're building, is on the one side the parent application, which is the family money tool where a parent can add new members, add their kids, manage everything from there, obviously being notified for any purchase the kid does or anything he accomplishes, he, she. And on the other side, which is basically the place we're trying to build the most of the value, is the child application and the 3 modules that we are essentially, plugging into that. So on the child app, we are having, expense statistic for the kids. We're having tasks for the kids to achieve and earn more money. We allow kids to set saving goals so that they understand, the value of saving early on. And the 3 modules we work with that we plug into this, let's say, core system is the Woli card, which is a MasterCard specifically designed for kids, with different controls, obviously, that the parent can set, like parental controls, maximum amount of money that you can pay. We have the Woli Classroom, which I mentioned as a module that's educational, and we have the marketplace, which is what we're designing now, essentially, trying to imitate what, let's say, adult banking is doing for adult providing many services that you would like to buy, like, let's say, an insurance. We're going to do the same thing in the marketplace for kids. And the first step will be to offer some vouchers for brands that, kids like in special discounts. So imagine that you would be able to buy your, H&M vouchers or gaming vouchers in a better discount through Woli. it adds up into this, let's say, as Eleni mentioned, a fun and engaging user experience, because that's, end of the day, what I think both parents and both kids are looking for, something simple that can organize their life. We have a kind of a clear business model. It's primarily subscription-based, so we have a basic plan and a premium plan, which we will be introducing once we grow the product the way we want. And the marketplace is also something that will drive revenue through the lifetime of the user. And then we're entertaining ourselves with the idea of bank affiliation. We're discussing with banks for the fact that, we can prepare through Woli a kid from the age of 10 to 18, and then when they're adults, we can essentially send them to a partner bank to continue the journey of banking in a nice way. It's kind of a large customer base where we have a license out of the Bank of Lithuania as a distributor of e-money, so we can offer our service around Europe, more or less. So we're talking about 37 million kids that can be addressed by our solution. These are kids around the European Union that actually get pocket money and are in the target group we're looking at. And we have some metrics that we're going after to achieve in the next few years. Something in the range of 500,000 kid accounts in the 5 years. I kind of mentioned the target customers. It's kind of tech-savvy parents. These are the first adopters we have for the product right now. And on the child side, it's kind of a sensitive approach because, first of all, they're kids. We need to be very sensitive about how we use their data. And we're talking about kind of two age groups. One is the younger guys that just got their first mobile phone and just gained some money out of some extra tasks. They play a lot of games. The teenagers are a clientele which is much more into trying to make a tool like this very cool to them to adopt it. There's a competition growing, I should say, so there are many businesses trying to do such a similar thing in Europe in 2020, launching like last year onwards. We place ourselves, in a place where we place a lot of value in education, and we have this feedback from kids as well, from parents as well, that they're willing to pay for such a thing that solves the payment problem for the family, but part of the money they would like to pay to us is for being reassured that the kid has a tool through which it can learn a few things and prepare himself for the tough battle of, being an 18-year-old with your own precious amount to, invest or do whatever you want. So, that's kind of the USP we're using. We have many partners that we've worked with to build our solution. Right now we're live in the market. It's true, we're live since August. And now we're kind of silent about this in the sense that we have a specific pool of users up to, let's say, 500 customers right now in Athens, in Greece. And we're still optimizing, let's say, a few things before we go to market in a more aggressive way. We're a nice young team. We're based in Athens. We have an office in Athens, and we are kind of recruiting mostly Greek guys. Also, a good friend of mine from Thessaloniki here. And we have a mixed experience, which I think makes sense. Why, let's say, also I think many banks have failed to develop such a thing is that we come from a totally different space. So we also have people from the social games, the mobile gaming industry. So we see this product as a mix of something really gamified rather than a banking application per se. And it all concludes with a mission that we want to really empower young people to give them this kind of financial freedom and knowledge that we didn't have. Like, I'm 38 years old, and I remember that when I was 18. I had really bad decisions about money. And, as a last quote, because like we're a startup, we're just doing our best to, get traction right now with early customers. I just want to make a note that we're already getting, really nice stories from kids that use the Woli card. And one was very touching in the sense that it was a kid with kind of special needs, right? So I got a call from, this happened yesterday, so I got a call from her dad saying how happy we are and how excited she is that she's getting her own card, because although it's a very small segment of kids. He was explaining to me how difficult it is to manage the cash problem of providing, cash as an allowance to kids that, have even a bigger problem to manage them properly. So, we have an angle which is really into financial literacy and helping kids to, get into this banking system in a much more structured way. So thank you very much. It's a pleasure, and I'm really looking forward to your questions.
Thank you. Our next guest is Theodoros Koukoutsas. He's CEO of GX Blocks Energy, and he will try to work on the literacy issue about blockchain, because he will try to educate us, sort of. Because for most of us, I guess, blockchain is not just Greek to us, it's ancient Greek to us. It's very difficult. So he will try to explain how renewable energy on the one hand and that data center and blockchain cryptocurrency are related. But before that, I kindly asked him to explain to us a little bit of how blockchain works and how cryptocurrency works and why does it need so much energy and why cryptocurrency has to be greener. So, Theodoros, you have the difficult task to explain all this in just a few minutes.
Of course. Thank you very much. So, my name is Theodoros Koukoutsas and I'm the CEO of GX Blocks Energy. Let's begin what is blockchain and how the network validates the transactions between the peers. So let's start with Bitcoin network. The Bitcoin network, to validate the transactions, is using servers. It's called Bitcoin mining operations. And through that, this act, they validate the transactions through the peers, and the data centers must consume energy to do these actions. As you understand, the Bitcoin market has grown exponentially. Also, the transaction volumes are growing exponentially. The result is the carbon footprint results is not very good for the environment. Our target is how to minimize the carbon emissions, how we can combine the renewable energies with those actions, and we have elicited a different model how we can do the Bitcoin greener. At the first place, our business core is to combine the renewable energy sources with mobile units which are hosting the data centers which are executing the validation of the transactions. In more simple words, the Bitcoin network, it's the Bitcoin backbone of the mining, and we must to execute all the transactions to have the nodes which are the transparency and the validation and the trustness for the users. Our business is eliciting new models for the renewable energy and the financial sector using the blockchain technology. Excuse me. First of all, our solution gives some benefits in the energy producers, which they provide the green energy to our data centers, and they can increase their revenues through a different solution, an alternative power purchase agreement. This is the first from the side of the energy. The secondly is from the financial sector, how we can provide an exposure to this market with a risk-averse manner. The financial sector afraid to expose in the Bitcoin mining market because it's a volatile market, it's immature yet, and also it's not user-friendly or environmentally friendly. Our main 4 pillars of business is from the blockchain energy, the renewable energy, the digital assets, and we are using Industry 4.0 technologies to combine these 3 different sectors. As you can see, the biggest problems in the energy sector is that the prices of PPAs and the auctions are very low at the last stages. And at the same time, the digital assets are consuming very large amounts of energy to execute those transactions. And last one, the volatility of the payments for the Bitcoin mining operators are a big issue. So we have proposed different solutions. For the energy sector, we provide an alternative power purchase agreement. We go directly to the power plants and we plug in our data center, which is hosted in a container, a mobile modular solution, which can consume the power which is produced straight in the energy source. Secondly, we provide green energy. We power with green energy the Bitcoin mining network. That means that we have a more efficient operation, minimizing the costs in the term of power, and at the same time increasing the efficiency of the operation. And last one, we have created some tools how we can manage the volatility and the output of those operations to have better efficiency and higher profitability for the users. As you can see, we have, first of all, we have introduced before 1 year the first Bitcoin mining contracts powered by green energy. Our clients is from the energy sector and financial sector, that they don't want to be involved with the complexity of blockchain of the Bitcoin mining. If you want to buy Bitcoin, is the one way, the other way is to mine it. The miners executing the transactions, they are getting every 10 minutes a portion of the transaction fees as a reward. Secondly, they want to store those Bitcoins in a safe place and with a transparent way to monitor the operations and also the assets. And last one, they want to go in the traditional market and how they can combine the traditional assets with the digital market. Secondly, our mobile mining unit is a modular solution which is hosting the servers where are executing those transactions, and it is a solution that or they can list from the energy producers, or we can customize a container that executes these transactions and place it directly in the energy source. Last one, as I told you in the first place, the alternative power purchase agreement. It is a product that we have seen a lot of interest from the energy sector, and they are looking for different options that can increase their revenues. As you understand, the Bitcoin mining market is new for everyone. It is consuming very large amounts of energy. The mostly countries, they don't use green energy, and we have a strategic, our country is a strategic place to elicit and create a distributed network of renewable energy sources combined with those modular solutions. Our target is to show to the business how can leverage also the blockchain technology in their operations, how they can monitor or balance the energy, and a part of the energy or getting lost in the network, in the grid, sorry. And also the excess or waste energy is also a big issue for the energy producers. We can provide them a solution to take advantage of this energy and produce higher profits in their operations. On the other hand, from the financial sector, they are seeing this product as an alternative tool to be exposed in the Bitcoin mining, and they have the solution to monitor and at the same time to have the clearance of the Bitcoin in their wallet. Last one is the operations that can match between those sectors. They can introduce new solutions. As the energy storage solution is very expensive for the energy producers, a different way is to consume the energy and to store the energy in a digital value. So the market needs to create value from the excess energy, and at the same time, how we can leverage the Bitcoin mining operations as an energy storage system. Last one, the operations can manage the energy which is produced or consumed from the grid, and they can balance the total efficiency of the producers. Our target is to provide all-in-one solution in one platform, which they can integrate in a virtual the energy plants, and at the same time, the miners, the Bitcoin miners, can integrate to take advantage of the excess energy. The big issue in Bitcoin mining, it was that there was a monopoly from Asia, but that market has been closed, and the last year we have seen a lot of operation going in Europe or USA. In EU, we have plenty of different power plants from solar, wind, hydro power plants, which can be leveraged to support the network. The most cryptocurrencies are using the act of proof of work, which needs energy, and a lot of that needs to be addressed with green energy. At the same time, the Bitcoins which are produced with green energy are combined with the ESG certifications, so the end user knows where they came from, these Bitcoins, and also all the track history, which is a big matter in this sector. And last one, they want to have a secure and transparent monitoring dashboard to have all the solution in one place. I will explain everything in any question that you may ask, and we will see if we can help you. Thank you very much. Thank you, Sofia.
Thank you, Theodoros. I assume either you will have many questions or
no.
too little. But are there any questions from the audience, or shall I start? I will. To Theodoros.
Like my question to Eleni, because I'm really interested in the product, is I'm trying to visualize this in an easy fashion, right? So I pay with my card somewhere in any type of. I was looking at Sam's Cafe in the example, right? So can you explain to us part of the algorithm that categorizes a simple cafe at a simple storefront, you know, anywhere around the world? How do you manage to do this in terms of a carbon footprint? You see what I mean?
You start with the easy part, because how do you actually justify that the transaction that you have just purchased with your card is at a coffee shop? So we start with the basics. So the first one is that this transaction is to be categorized in a specific category, and this is, in our case, coffee shop. This happens as part of our categorization engine that is actually classifying this from most of the times from MCC codes or from Visa and MasterCard, that the POS is providing this information, and then your transaction is classified as coffee shop from that in your system, in your banking app. Then you need to get the coffee shop transaction and the MCC of that is adjusted to coffee, food. You need to classify it to specific taxonomy. And then the taxonomy resides in the carbon index, where it will calculate that your coffee is 20 kilos of CO2. Exactly. It depends on the size of the transaction, depends on the country that you have made the purchase of the coffee, because all indexes are not just a generic one, they are localized per market, because there is a difference when you buy a coffee here in Greece and the one that you will buy in UK. That's why we say we can't just have a very generic number there, because it is an estimate, but at the same time you need to be able to classify it. So it does sound a bit complicated. I'm pretty sure our data scientists will explain it in a more efficient way than me, but I'm just giving you the methodology for that.
I'll take it from where Vasilis left it. So if I pay for a cup of coffee here 3 euros and in Brussels 6 euros, that may be counted as a bigger carbon footprint in Brussels.
Depends. I'll give you another example. Maybe coffee is not the best. I'll give you the big categories. So let's say that an average person in a developed country can consume or can produce between 8 to 16 tons of CO2 per year. My carbon footprint in 2019 was 12 tons. My carbon footprint last year was 4, because I was not traveling for work. So what I'm trying to say is that when you try to classify how much kilos of CO2 you are producing, you need to contextualize it, because if you ask me, first of all, I don't know how much. Second of all, even if you tell me it's 12 tons, I don't understand what that means. So unless you tell me that your coffee can be given back to the nature by planting 4 trees, then I can understand. But if you just tell me 4 kilos of CO2, congratulations, you can do better, it's a big difference. So there is a very big science when it comes to you classifying and giving the taxonomy and giving the CO2 equivalent, but there is also a very big science when it comes to the algorithms and the data that you input in your index and how you exactly localize your index in order for you to make sense for Sofia in Greece, for Eleni in London, or for the rest of us in the different areas.
I understand why a bank would want meniga's product, because more or less, many of us in many countries have been worrying about the climate change. But why consumers would want a bank to advise them about environmental issues? If I was a client, I would, and if I am environmental conscious, I suppose, I would want, first of all, my bank to be conscious and, for example, not to lend industries that pollute.
That's a very good point. That is a very good point. But there are carbon calculators that are for individuals as a B2C solution, and this is something that you can do. But for us, it doesn't make sense if I have a calculator as an app on my mobile for the things that I can't have an input in the data. And banks do have this data. That's why we are addressing our solution towards them, because as we said in the presentation, banks are considered custodians of personal finance data. They have all the information, and unfortunately, it's my information and your information that they have. So they do have, let's say, the ability and this unique position of providing you context in things that you as an individual with an app that is a carbon calculator only would not make any sense. While when you have the overall digital journey, you have all your transactional history and you have your carbon footprint there in front of you, it's way easier for any consumer to understand it. So if you ask me, I would like personally to be carbon conscious, and I don't mind if this comes from a bank, as long as the bank is giving me online transactions in real time that they can actually mean something and be accurate than just having an app that has some information from an index that I don't trust.
And it's only for consumers. I mean, it's not for companies.
Yeah, our solution is covering SMEs as well, so small, medium enterprises related to carbon usage as well, which is also another change in the carbon index that they are using, because of course when you are an individual, most of your expenses are probably in either flights, traveling, holidays, or your rent and your bills, your utility bills, while when you are a company, the main categories that make sense for you is what you are paying for your the people that you are working for, and like in and out accounting that is completely different than an individual.
So an SME could use meniga's service to prove that it's carbon conscious.
And then have support from the bank for companies that they are actually carbon conscious on the background as well, not just with the individual, but also the fact that the companies are sustainable.
From which countries do you see that there is growing interest? I mean, from Europe are more carbon conscious?
So again, experience on Meniga, the company is from Iceland. Our second office was in Stockholm. Our customer portfolio is started in Scandinavia. So Scandinavian banks were the first one. So Íslandsbanki, which is the biggest bank in Iceland, was the first customer that had actually launched the solution. So it started from that part of Europe. But yeah, we see a lot of interest in our other customers in Europe, and we also see a lot of interest in Southeast Asia as well, at least, again, speaking on the customer perspective on our side.
Eleni or Theodoros, would you like to ask something, Vasilis, or anyone from the audience?
I have a question.
If I may, there is something for Eleni before we go to Vasilis. Kostas asks that, so the next step for the countries are the carbon-related taxes. it's a wider question.
Why not? Why not?
So,
taxes is a category that is part of the solution. So this is something that is classified as part of the categorization. So yeah, why not?
please, your question.
Thank you. I think the model is fantastic, the business idea is great, and I'm just wondering from a scale perspective, whether you can give us any insight about the challenges to do with the data points standards. So is there an agreement between international bodies within the supply chain about what constitutes the carbon footprint, for example, in moving one shipping container from Singapore to London versus Singapore to Australia? I wonder if this, I think the question is more about standards.
Yeah, which is...
See if there is any friction there. I guess that's where my question is coming.
Which, yes, there are a lot of differences, and this is all information that is an input for an accurate carbon index. Otherwise, it makes no sense if you don't classify those frameworks there. That's why I was saying it does make a huge difference, and it does take a lot of work, not complexity, but work to localize every index and get these algorithms and the metrics that you are referring to and specific frameworks in the system. Otherwise, it won't make any sense. It's going to be just an estimate that is not accurate, and it's probably completely wrong. So yeah, you are absolutely right.
And I guess a follow-on question, so I'll be very brief.
No worries.
Do you think there is a role for governments, regulators, and maybe standard-setting organisations to play in supporting the acceleration of those accepted indexes? Scale the model?
As I was saying in the presentation, COVID has showed us, unfortunately, what happens when we don't work together to address a global threat. So this type of solutions, the only way to go through and the only way to have scale is have as many parts, either government ones or private sector-wise, collaborating together. Otherwise, you're just making, like a very small step, and you will get stuck at some point. So yeah, absolutely.
I think we will take a last question for Eleni, and then we will move on for
Thank
Theodoros.
you.
Okay. Can you hold your question to follow the program? Vasili, I was wondering when I saw your Woli service, why use this mobile instead of giving a kid a prepaid card and do with his or her allowance whatever they want?
Okay, I mean, we also give a prepaid card to the kids, but this is part of the solution. I think a simple prepaid card is not what solves the problem of educating kids. On the contrary, a simple prepaid card is actually, you can find it in any bank around the world. And I think it only makes a deviation to the issue we try to tackle. So what we're trying to build is a specific application for kids that actually educates them, is actually interactive, where they can build their own goals, where they can find classes. So the whole experience of Woli banking, let's say, for kids is what we're building, and it's far larger than a prepaid card.
But I saw that there is an option for the parent to give the child an extra bonus if he tides up his room.
Depends,
and
yeah.
I was wondering, is it a good idea to bribe a child to persuade him to clean up his room? Is it a good way to educate him or her?
Look, I think like anything we build at Woli is split in a certain category that has to do with money management, right? So for kids, earning money is one of these, let's say, pillars. It's saving money, earning money, spending money. Each of those pillars has its own system of operation, so to say. So for earning money, if you're a 10-year-old, there are not many ways to earn money other than, asking for money from your dad as a request, or a regular allowance, or something that, is a task that you try to understand that, okay, I did something good that my parent decided, right? So it's the parent's decision what kind of task they can set out there, right? It could be, I don't know, get good grades at school and I'll give you 20 bucks. Or,
My children
I
are...
don't know, that's not my job.
My children are 3.5 and I'm afraid I will have to deal with this dilemma.
We'll do it together.
But I was wondering, you said that kids might use the credit card to play online games. And is there a way that children can reset the spending limits the parents have set
No.
without the parents knowing it?
No. So, I mean, on the spending pillar, as we said before, so we have the card. The card is already set up in a way that it cannot be used to any non-child-friendly places. So you cannot, it's not accepted in gambling places, it's not accepted in, the porn industry. So anywhere that it should not be found. So over and above these, let's say, system setups, we have parental controls which can never be, destroyed by the kid in any way. And we're introducing also MCC blocks. So we're introducing on the parent side merchant category blocks in the sense that, if you think your child is being too crazy with Fortnite, you can simply switch, online gaming off for a while until your kid cools down.
So he cannot steal my mobile and reset it himself.
Okay, that's a nice way. This she can do. Yes. If he knows the codes and everything, or has your fingerprint, yes, she can do that.
One last question, because you said that you educate children,
Yes.
but you said also that you give them a voucher with
For games, or something.
Can you educate them to consume less, to persuade them that you don't need that extra T-shirt?
Look, I think, yes, the whole setup that we're trying to build is moving the spending of kids from stupid stuff into bigger goals, right? So what we're introducing in the next few months is like the saving goals for kids. So that's one thing that, if a kid wants to buy a pair of shoes in the next 2 months, it can start saving towards that goal in a fashion that is very dynamic for the kid to see how this evolves, right? So you get 20 euros on Monday, and on Tuesday you say, okay, let's send that 5 to the bucket I have for my Nike shoes because it makes sense for me to save. And we're going to be pushing the kid with, what we call kind of money tips. So it's smart notifications for helping the kids save faster or spend less month over month. So, this is part of the process. What you said.
Okay, well, let's move quickly to Theodoros. Let's take the first question from the audience.
What's GX block strategy, as you said, about the risk-averse strategy to produce, to mine bitcoins, and how you combat the hash rate volatility of the Bitcoin network when it goes down rapidly? Because you said you observe these gaps from Asia towards EU and USA. So what's your strategy? How do you trade digital assets? How do you leverage?
Okay. Very good question. So, let me begin from the data centers capacity of Bitcoin mining. The first years installed in Asia and in Kazakhstan. After the last year we have seen to move in EU, and they are trying to address green energy in those operations. And a lot of countries are beginning to have different legal frameworks to not use not environmentally friendly power to the operations. The first reason they used a very low price of energy to produce bitcoins, it was because the cost to produce one unit, it was 10–20% of the actual price in the index. In our case, we can match these results with green energy. If we are self-producers from the green energy and we consume the energy in the same place and we do not use the grid, we have the same efficiency as those countries. And Greece, it has a very large capacity in areas to develop those plants, but in the grid there is not a lot of capacity to provide this green energy. In the terms of volatility of hash rate, this is because the manufacturers is a very close market. It is only two manufacturers that produce those miners, and the demand has increased exponentially the last 3 years. A lot of organizations expand their operations on those countries. They took a bet, but at the end we saw that the legal frameworks didn't match with their expectations, so they tried to modify the strategic position of their operations and trying to have or hosting services or to sell the hardware and begin a different business model. In our case, it's not that we want to stop producing green energy or to stop supporting the Bitcoin mining network. The Bitcoin mining network, it will be here for a lot of years from now. It's not the new Bitcoins that it's mined, but the network fees. The network fees are increasing exponentially by the usage of the digital asset. Compared with Visa, a transaction from Bitcoin with a Visa transaction is multiplied by 100. The power that needs to execute one transaction. Our strategy is to develop a distributed network in Greece with our plants and also from third-party plants, and to have the capacity of the Bitcoin mining network here in Greece and to keep it efficient and sustainable.
One quick question. I saw that in your model, you are saying that they have liquid operations for cooling the miners. So what's about the efficiency compared to the traditional ones? What does your case show?
This type of solution is just getting starting in the industry. Before 2 years, we saw from Google and Amazon to start using this solution. So it's beginning to be efficient also for the operations. At the present time, we are in a pilot operations to test it and to grow it in a larger operating model. They can increase the revenue of our operation and decrease by 10 to 20% the energy power needs. So it is a future solution for cooling methods for the data centers. Combined with green energy, we have the best result that we could. Thank you.
We have a second question and maybe a third one.
Just a question.
Of course.
Mining, but from a finance perspective, in fact, 2 questions. Are the capital costs of your operation, because of liquid mining and the need to move the containers, in your opinion, higher? So is there a higher cost to being green? That's the first question. And the second question is to do with the coins when you attach the certificate to show that they're being produced with green energy. Does that have a positive impact on the value of those coins? Is there a premium that the market is willing to pay for clean coins in 2 senses? One with no history and 2 with a green certification.
Of course, very good question. The first one is that the modular solution is a very good solution because we can directly be plug and play in any energy source. The capex costs is lower than to create a data center which is hosted in a building. Also, the liquid costs have been decreased the last 2 years and is starting to be more mature market to exploring. As for the ESG certifications, it is a very good question because we have seen the last 6 months in the private sector to have a premium by 10% the Bitcoins that have been produced with green energy, and they have the transparency and the track history that is in the first hand of those Bitcoins. A lot of enterprises, they don't want to buy Bitcoins or digital assets from the free market because there is a big problem from the track history of those coins. As from the energy, we can consume around 3,000 of megawatt hours to produce 1 Bitcoin. At least with a price from Asia, with a $50 of megawatt hour, the Bitcoin price to produce it was $20,000. we can do the same much with the green energy right now. So this is the difference that we can provide. And also, I'm going to the power purchase agreement, the alternative, which can produce up to 100 euros per megawatt hour for the energy producer from this act. So it's a more hybrid model, but we see a lot of interest from the energy sector. Thank you.
Is there any other question from the audience? Or? Okay, I have one last question. Does the current energy crisis affect you at all? I mean, if the prices are high, why should I sell you my green energy or instead of selling it to the system if the prices are high? And a sub question, do you cooperate only with plants, or if I have some solar panels in my field and I'm a small producer, can I sell you my green energy?
Okay, let me start for the first one. If you have a power plant, you can go to an auction to have a power purchase agreement with the PEP, and the second option is to go to the open market. At the present time, the open market has a very good prices for the energy producers, but for those that was in the PPAs and they are expiring their contracts, they don't want to go to the open market. We can provide a different model for that as the alternative power purchase. And secondly, as for the net metering, if you have panels in your house or in your building, we are expecting the virtual net metering to be opened in the market. So in more simple word, we can combine all the plants in a virtual plant in the cloud, and we can have the energy addressed in one exactly same place to consume and produce digital value for those producers.
Thank you. Very complicated, but very interesting at the same time. Thank you, Eleni, Vasilis, Theodoros. Thank you all for your questions. I think with this session, the conference closes. And I will want to thank KEPA once again. And have a nice afternoon, evening. Bye.